Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has been involved in $3.7 billion worth of capital financing and mergers and acquisitions. He has over 10 years of global investment experience. Omar Khan is with Boardwalk Wealth. Omar, welcome to Purchase to Profits. It's great to have you on the show.
Hey, thank you. The pleasure is all mine. And finally, I get to talk to a Canuck.
Yeah, that's right. I'm really excited to talk to a fellow Canadian. That's great. So, and I'm sure we'll have a couple good stories about hockey, igloos, and snow.
And I can tell you, I don't miss 2 out of those 3 things.
Yeah, that's right. Hopefully in a couple of years, I'll be on a beach somewhere enjoying the life you're living.
Hey, you can be on a beach. You can just be on a beach in Newfoundland.
That's true. Very true. So to kick things off, tell us about your real estate goals right now.
Well, look, the goals are very simple. I come from an institutional background where basically the deal is it's performance-based metrics. So typically what we target is large apartment complexes around Texas and Florida. So we try to do a deal a quarter, ideally 1.5 deals a quarter. The average ticket size is between, say, $15 to $30 million, give or take. Yeah. So we try to do one every, say, 2 to 3 months, and that's basically the goal. But what happens is, I say that, but what happens is I might not do anything for 6 months just because the numbers don't work, and then do 2 or 3 back to back. Yeah. So that's kind of, it averages out like that, but it never really works according to 2.5, 3 months.
Yeah. And do you have any sort of, like you mentioned, most of your deals are in that, 10 to 15 kind of $1 million range. Do you have any volume of number of units you want to hit per year, or say I want to purchase X amount of volume, or is it just kind of?
No, it's just dollar driven for us. Look, I know a lot of people say units, but then what happens is they start buying really crappy deals in the ghetto. And you're like, yeah you got 2,000 units. Nobody wants to live there.
Yeah,
that's kind of the way I look at it. Look, it's a dollar-based business at the end of the day. For instance, buying, say, an apartment building, if the numbers make sense long-term, might be a better deal in, say, Toronto than buying it, I don't know, in PEI. Now, you might get more doors in PEI, but let's be honest. What are you going to buy, right? That's the way I look at it.
Yeah, no, that's a really good point. And so right now, with the way you're at in your business, how have you grown your business from when you started to now? Like, what does that journey look like? How many years have you been at it?
So I moved to the US 3 years ago from Canada. So my family's been involved with commercial real estate, and they're fairly financially sophisticated. So I kind of had a lot of those pieces going with me, going for me. But I started about 2.5 years ago. We scaled up to about $120 million assets under management. And basically how we've grown is a combination of our personal networks. A lot of investors are generous enough to give referrals, but then a lot of this is just going out and meeting people. Like, it's like a day. You're a realtor, you know this, right? A lot of this is physically going out and meeting people, because if you stay at home, in your office, look, you might get some action, but you're not going to get a lot of action. It's a lot of times it's putting yourself out there, and what happens is, 90% of the meetings or calls I take, I know are useless. I just don't know which of those 90 out of the 100 are useless. So you it's a bit of trial and error, right?
Yeah, for sure. And I know, through my own personal experience, the person you talk to today might come back to you 2 or 3 years down the road.
Oh, yeah. Plus, a lot of times the really good investors, the guys that write us bigger checks, $1, $2, $3, $4 million, they like to see some action and track record first. But when they do come, they're sticky. So it's not like a one and done sort of deal, right? They want to pick a manager. Like on the institutional side, they'll take some time, they'll get in, but once they're in, or once you're in, dude, it's just plug and play after that.
Yeah. And what inspired you? You mentioned that your family had a track record in commercial real estate. Was that really what pushed you into
No, not really. To be honest with you, my family invested a lot of money, sizable portfolio of money into commercial real estate, but that wasn't their main line of business. That was just where they parked their money. So what inspired me was a couple of reasons. Number one is obviously the amount of money you can make. I know people have grand ideas about what their why is. I want to solve world hunger and stuff. Yeah, I had none of that, man. None of that crap. And the other deal was, my wife's a physician. She makes decent money. I make decent money. So the other was managing our tax position. We were just paying a weird amount of money, like pretty high 6 figures in taxes. And we just didn't want to do that anymore. Look, we still pay taxes. Don't get me wrong. I wish I could pay 0 taxes legally, but we want to manage that position. So for us, it was making a lot of money. Our investors make a lot of money, and only when they make money do I make money, right? And then managing our tax position, basically.
Yeah. So what changes did you have to make with how you thought about real estate to get into that syndication space?
To be honest with you, given my background, say on the institutional side, having dealt with a higher, say, more affluent sort of investor, or the type, say, guy who can write you 100 to say $1 million, $2 million check. In terms of mindset, it wasn't as much of an issue because I was dealing with that day to day anyways, and through my family's businesses as well. But the bigger deal was understanding a lot of structural place things around your business, how to delegate work. So even though, say, for instance, I could do something faster, I have to learn to get the hell out of the way, right? So yeah, somebody might take a little longer, but look, I'm not doing that work anymore, right? So it frees myself up. So, and it sounds very easy to say, but at least for me, I had to learn it the hard way. Yeah. The other thing was hiring the right people and then learning marketing, but on a more retail level, not necessarily on the institutional level, where marketing is of a different type. It's more sophisticated in terms of numbers and analytics, whereas on the retail side, you kind of quite literally have to go to people's houses, right? Yeah. At times. I mean, you can't just randomly show up, obviously. But, quite literally, a lot of times you'll have a few beers and, well, that's how it happens, right?
Yeah. And
so it was learning those types of things more than the technicalities and the running the business and all of that stuff.
Yeah. And when you started your business, you started on your own with no staff, right? And then you built up from there?
Yeah, look, I always had people in terms of people that I hired for specific roles and everything. So they weren't like, say, employees. They were more like 1099s. Oh, no. What is the word in Canada? I'm forgetting.
Independent contractors.
Independent contractors. See, I'm totally forgetting now my Canadian lingo.
Hey, that's okay. 75% of our viewers are in the States.
Yeah, so a lot of folks were contractors. So you can outsource specific work to them. But yeah, when you're starting out, man, look, unless, I don't know, you're worth $10 billion, which I wasn't even close to, yeah, you got to do it on your own. You got to do a lot of things on your own.
Yeah. And how has bringing in those employees or contractors allowed you to scale your business? Would you say that your business has really taken off once you brought those people in?
Yeah. Well, look, not only has it taken off, which is a very nice side effect of this thing, what's also happened is it's freed up my time mentally, more than the physical, like, hey, I got an hour extra. Mentally, it's freed up my time for me to focus on more higher dollar items, right? Yeah. Higher dollar items are, for instance, sourcing a deal or sourcing a big investor, a guy who can throw you $2 million, right? Now, for instance, yeah, I was doing that also, but when you're pulled in 15 directions, when you're managing your calendar, answering your email, setting up calls with brokers, doing the initial screening and everything, dude, by the time you get to it, I mean, there's only 24 hours in the day, right? So those higher dollar, the time compresses. And yeah, you kind of do it, but you don't really do it systematically in a nice, proper way.
Yeah. And actually talking about systematic ways, do you have any routines or rituals that you follow maybe daily or weekly that helps keep you focused?
Man, I got a 1.5-year-old son. So let me tell you,
yeah.
Any routine I have, it gets thrown by the wayside every single day when my son Zan gets up in the morning and decides how he's going to play that whole day out. So yeah, I have some routines. I wish I had more of them, but because I have a son and because he even though does not speak, but is very communicative, yeah, a lot of my best laid plans get thrown by the wayside.
Hey, I feel I've got almost a 2.5-year-old, so I know exactly what you're talking about.
I mean, look, I love my son, man. I wouldn't have it any other way. But then again, I'm also, look, my wife as well. We're both very, by nature, we are organized people. We're somewhat meticulous by nature. So a lot of times, for instance, what I'll even have is kind of like a checklist, or I'll write, say, the 5 things I got to do today on a piece of paper, right? Whatever, my writing pad. And this way, at least I can start checking those off. So this way I know I've gotten through that stuff, right? But because having a good staff and training them the right way has also really helped in understanding that even though my schedule goes off, I can still cover up, basically.
Yeah. And one of the things I wanted to ask you about before we started recording, you started off with a big base of Canadian investors investing in US deals because you're from Canada. Yeah. What sort of challenges did you encounter with that, bringing Canadian money into the States?
Personally, I had no challenges. There's 2 reasons for that. Number one, practically, look, Canada and the US have very good relationships with each other. Our banking is very interlinked. Our traveling back and forth is very interlinked, as you know. So in terms of structuring the deal and physically bringing the money, there's no issue practically. Then Canadians are very attuned to investing in the US, or even if they haven't, but they understand the concept. Mm-hmm. So there were no challenges there. And the other thing also is, because I'd worked institutionally, because I had the background, I knew how to again, this isn't some grand design. This is just, you're in a profession and you learn things, right? I already knew how to structure those deals in a manner where, for instance, I already knew cross-border CPAs. I already knew cross-border lawyers. I already knew guys on both sides of the border. Again, not by design. This is just when you're in a profession for some time, you just know people, right? So that facilitated a lot of conversations much easily. As opposed to, say, if I wasn't in, say, finance, if I wasn't in institutional finance, if I wasn't doing a lot of mergers and acquisitions, then I'd have a harder time on setting those sort of things up. So the harder point was raising the money, or actually finding enough people to raise money, but not necessarily bringing the money to the US. That wasn't.
Gotcha. Did you ever encounter any objections about just the exchange right now, just because it's pretty unfavorable to Canadians?
Well, the alternative is, where are you going to go invest in the US, in Canada? Are you literally going to go buy an overpriced condo in downtown Toronto?
Yeah.
Because that's another way of losing money. I mean, it literally gets down to that. But look, the other alternative also is a lot of investors I knew were fairly financially sophisticated. So they in one shape or form understand, look, you can either take a hit on the exchange rate or you can take a hit on buying something crappy. I mean, you decide what you want to do, right?
Yeah.
So because there is no free lunch, basically. Right? Yeah. So they kind of understood those concepts. I think a lot of those conversations are easier. And yeah, man, look, it freaking sucks. Because when I had to cash out my TFSAs and RSPs from Canadian dollars, I was like, you got to be freaking kidding me, man. Like when I put these in, like the Canadian dollar was at par with the US dollar and everything was good. And now it's like, whatever, 1.3. I was like, are you kidding me, man? I just took a 30% haircut. This is stupid.
Yeah.
Right? But look, I get it. It's painful. But what are you going to do about it, right?
Yeah. And do you want to share, because you've built up a pretty sizable group of investors, do you want to share with the viewers, what steps you've taken to help grow your pool? You mentioned some referrals from other investors. Yeah. What other things are you doing?
Look, the biggest thing that we're doing, which we feel helps us, well, I think it helps us set us apart, but that's what people have told us is, look, everybody, me and partners I have are all financially sophisticated people. We've all worked institutionally. So anytime even our sophisticated investors, either Canadian and otherwise, have really peculiar questions, or their CPA has really peculiar questions, we're able to not only answer those questions, we're able to provide them all the reporting, all the transparency, right down to the unit level, literally right down to the last cent. And again, we can do that because that's our professional background and that's the way we set up things, right? So it wasn't like, we did a deal and then worked backwards to have all the systems in place. We already had the systems in place and then started doing the deals, right?
Yeah.
So what it allowed us is to provide a level of transparency and granularity that practically hardly anyone right now is offering. And that's, I think, facilitated more conversations, because when people see 100% transparency and when they put their CPA on the line and you can talk with that guy and within 5 minutes, he's like, on the call, he's like, yeah, I get it. Yeah, we're going to move money today. That's when that thing really clicks. Because then people, look, at the end of the day, it's your hard-earned money, right? Look, you work really hard for it. So you need to have some level of comfort and security to know that not only are the people who are managing your money competent, they have integrity, but they've done it before. They have a track record of doing this. So I think when you present people that option and when they see it in front of them, a lot of so-called obstacles and hurdles go by the wayside.
Yeah. And you mentioned that transparency. One of the things that many of our successful guests talk about is that communication, that constant communication.
Oh, yeah. It's over-communicating, in fact, a lot of times.
Yeah. So are you, tell us about your communication with your investors in a deal. Are you communicating monthly or quarterly?
No, first of all, not quarterly at all. We're communicating monthly. And then at the start of the value add process, which is, when we're rehabbing and all of that, sometimes we even do it 2 weeks at a time. And like, say, for instance, public companies do anytime a material event happens. So for instance, on one of the properties we did, one fire got out. Not got out. There was a fire and only one unit thankfully got affected, but we disclosed it within 6 hours. Because look, first of all, there's no use hiding it. Number two, we were going to get all the money back from the insurance because we'd set it up everything. But you as an investor need to know what's going on. Now, I could have waited 3 weeks and sent you that monthly letter with all the financials and everything. But I just try to get ahead of these situations and over-communicate. And a lot of times, look, let me put it this way. Nobody's going to complain when they have their money and you're over-communicating but providing like real actionable value, as opposed to under-communicating. That's when people complain, because nobody likes being in the lurch, right? Nobody likes being in dark. It's okay if you screw up, but things happen along the way. But just don't try to hide stuff. Always be transparent, always be open, and things happen, right?
Yeah, no, for sure. That's a really good point. So out of all the deals that you've done so far, is there one that stands out as a keystone deal?
Well, there's all of this count as keystone deals because every deal is kind of different. At this level, when you're at the $15 to $30 million level, each deal comes with a particular set of peculiarities. I can talk about the latest deal actually in Jacksonville.
Sure.
And basically how that happened is that although we're Texas-based, I got two partners in Miami. And how that deal happened is we had a very deep relationship with the broker there because I'd run a lot of economic analysis and figured out Jacksonville was the market we wanted to expand into after San Antonio and Austin. Right. So what we did for the first 6 to 9 months is we literally every 3 weeks, partners from Texas and from Miami would go to Jacksonville every 3 to 6 weeks. And we would literally the purpose of the trips was just to make broker relationships. Kind of like wine and dine, play golf, go to the office, have some lunch here and there, and tour properties. And trust me, there were a few properties that we could have bought, but we didn't buy just because we were building the relationship first, right? We didn't want it to be, hey, buy a property and then forget about people. So when this opportunity arose, we had already told the broker, look, these are 3 submarkets we're actually very interested in, right? Anything outside of that, don't even bother showing me. Right? These are specific geographic areas I'm interested in. Here's my investment criteria. So all the research was done. So when this came online, this per deal came online, we already knew what the play was, right? Generally what the play was, what's going to happen. Then, coincidentally, I also knew who the seller was. Just because you're in an industry, you get to know people. And I knew what their pain point was. Their pain point was they quickly wanted to liquidate because they were getting a new fund. So then I could basically cut a lot of people, get ahead in line, and basically within 5 minutes solve their problem. And say, hey, yeah, we're not going to take 90 days. We're going to do it in 60 days. The money's here. You know me, blah, 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 blah. But that only comes when you've laid out the pipeline and infrastructure the right way. And again, the asset was very attractive. That's why we could move quickly. So a lot of this is relationship building, but also empathizing and try to understand your counterparty's point of view, right? Because look, if you have a pain point and I can take that pain off your shoulders, well, you're just more inclined to work with me. That's just the way it is.
Yeah.
So that's what it was.
Yeah, and I really like the point you made. You were really heavy on building those relationships first, because I'm sure you'll agree, like your deal flow comes strictly because of those relationships.
Oh yeah, it's all brokers. Like I honestly, like I know these people, some people in the USA write yellow letters and something. Honestly, man, I don't even know one guy who's like doing a legitimate business who like this thing gets all through brokers. Okay, they're professionals, you're professionals. Everybody just cuts to the chase and does a deal smoothly.
Yeah. And with your recent deal, what attracted you to it first? What was it? A value add component? Was it the location that really stood out?
Well, there's 2 reasons. Number one, it was in our preferred. It was in the top one of our 3 submarkets in Jacksonville. So we picked out geographical areas. Then we knew it had a heavy value add component, because what had happened is, because I knew the sellers, they had bought an initial spate of properties around 2012, and they had scaled up so fast, because they had gotten some equity partners in that they were at $1 billion, and now they were doing like $100 million deals. So basically all the nicer, smaller assets that bought earlier, which they planned on renovating and all of that, well, man, they completely ignored that because they were going after bigger fish.
Yeah.
So really great location, a lot of deferred maintenance and value add. And basically a lot of rents hadn't been pushed in like 3 or 4 years. In fact, there's a couple of people whose rents hadn't moved in 5 years. And they were basically getting, I was also wow. Because initially when I looked at it, I was like, man, that can't be true, man. I mean, it's just stupid. This is obviously wrong. And then we went through the records, and yeah, it was right. It was just the way it is. They just kind of ignored that thing because it was for them, it was on the smaller end of the spectrum, right? For us, it fit right in our wheelhouse.
Yeah. So are you going to go pretty heavy on the value add, do a refi and hold for, another 5 years? What's your game plan?
Like, there's a couple of options we have. We can refi and hold for a longer period. What we can also do is just hold for 5 years and sell. We are going to be value adding, but it's not going to be super heavy. It's going to be like on the medium side, because again, the issue is a lot of people, when they have money burns a hole in their pocket, right? So what you don't want to do is over engineer a problem. So if your tenant can only pay, say, $100 extra in rent, what you don't want to do is go put like $10,000 worth of renovations, because it looks nice, but nobody's going to pay you for it.
Yeah.
Right. So that's basically what we're going to do.
Yeah.
I mean, we have a lot of options right now. The value add program is going to start. And then in 2 to 3 years time, we'll see which one gives us the most bang for our buck.
Yeah.
No, right? But we structured the deal in a way that we were not backed into a corner.
Yeah, no, that's a good point. So since you've started in real estate, I know you had your previous background. How has real estate really changed your life?
Well, I mean, look, I make a lot more money. That doesn't hurt.
Yeah.
I mean, that obviously doesn't hurt. I'm running my own business of sorts. So, I mean, look, I have partners. So what it also does is I still probably work the same hours that I worked in the investment bank, about 70, 80 hours a week minimum. But I have more of a control of when I work those hours. So working for me was never an issue because look, my wife's a physician. She works really long hours. For us, working was never an issue. But the issue was, when do we get to work? When do we get to pick and choose? Because look, in our business, you got to know when you got to literally just go, go, go. And sometimes when nothing's happening, well, you can't work harder to make something happen. Sometimes it's just a matter of time, right? It's just bad timing. Things aren't happening. So chill out, relax. That option is not really available when you're working for somebody else. So in that particular way, I think time freedom is the biggest one that's happened. Apart from the fact that I make more money, which is obviously kind of nice.
Yeah, and that was your big reason for getting into it too.
No, look, the big reason apart from the managing my tax position was also time management. Yeah. I was just sick and tired of basically. Look, I'd seen my MDs and a lot of the bigger guys at the bank when I was working at RBC and CIBC, and yeah, they made a lot of money. Don't get me wrong, but man, they had no control over their time. You know, if some like email shows up at 4 a.m. and the world is collapsing, well, yeah, they couldn't ignore it. So I was like, what's the point of this kind of life where you make a lot of money, but you're always miserable? You know, you're always at the beck and call of somebody else. So that was also a big reason.
Yeah.
You know, I have no problem working. I just want to pick and choose when I work.
Yeah, no, for sure. So Omar, if somebody's looking to get in touch with you or learn about your business, where can they find you?
Well, I thought you never asked that question. You can go to our website, Boardwalk Wealth, BOARD Walk Wealth. That's one word. You can also reach out to me at Omar, at boardwalkwealth.com. And look, if I can answer your question, I'd be more than happy to connect you with people who can, and they can guide you through whatever questions you have.
Yeah, that's perfect. Well, I just want to say thanks so much for taking the time today to share your success with us.
Hey, thank you very much. I really appreciate you taking the time.
It was my pleasure. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.